Hi everybody, I'm Steve Hall and I'm the creator of the Best of Portland TV show, and today I'm going to play an investigative reporter and hopefully help you to understand the mortgage modification trap so that you or someone you know can stay out of it, or if they're in it, they can get out with as little damage as possible. So I wanted to ask you, do you feel like you're working harder than ever before for less? And do you know anybody that's tried to save their house and get a mortgage modification and end up spending many months and lots of money doing all the right things and still lose their house? If you're experiencing any of these problems, I'm here to tell you it's not your fault. There are things going on behind the scenes that have led us to this place, where you're working as hard and as smart as you know and feeling like you're losing ground every day, because you are. They set it up this way. So stick around in this video. I'll show you some of the evidence, and at the end of the video I'll give you something that'll help you. Before I get into all the details, I want you to know I have personally been down this road. A few years ago I worked for a multinational corporation I would love to name, but that's another story. And I was let go on December 1st with 2 weeks severance pay after years in that position, despite being the top guy in a two-state area. To make a long story short, I ended up getting a divorce after 25 years of marriage and lost my family and house. I was confused, frustrated, and pissed off. How could this happen to me? I worked hard and did all the right things. As a result of that experience, I wanted to know why the economy crashed and ruined my life and the lives of the people around me. And until recently, I did not understand what was really going on. But recently, some things came to light, and now it all makes sense. I started digging. What I want to show you is what I found out. I want to warn you, it's going to make you mad. In this series, I want to help you to understand what I found out about the mortgage and the banking industry and how you can do all the right things and still lose your house and job. If you know anybody struggling in this economy and trying to keep the most valuable assets, their home and family, you have to know the rules of the game. And what I found out is they're not what you think they are. You probably already know there are a lot of hidden rules and agendas people don't know about, and that's why we have so much confusion and stress. The last numbers I heard, there is over 2 million people losing their homes to foreclosure this year alone, and that number is growing, as well as there are 2 more waves of junk loans coming that'll drive our economy deeper into this recession. You need to know how to prepare for this. My question is, how could this happen in the richest country in the world? It just doesn't make sense. So stay with me. I want to play you a clip from 60 Minutes that'll shed some light on the problem. And at the end of the video, I'll tell you about the 3 best options that I've found.
When it comes to bailouts of American business, Barney Frank and the Congress may be just getting started. Nearly $2 trillion tax dollars have been shoveled into the hole that Wall Street dug, and people wonder, where's the bottom? It turns out the abyss is deeper than most people think, because there is a second mortgage shock heading for the economy. In the executive suites of Wall Street and Washington, you're beginning to hear alarm about a new wave of mortgages with strange names that are about to become all too familiar. If you thought subprimes were insanely reckless, wait till you hear what's coming.
Home loans from hell.
All these fees are racking up and none of it made sense. And in the end result, I might be moving out of my home, getting foreclosed on, which could damage my business, which ultimately could ruin me.
A government program designed to help homeowners instead may be helping banks make money while driving some borrowers into foreclosure.
Maybe wrong, but I think most people have the feeling, well, if a home goes into foreclosure, everybody loses. What you're telling me is the bank often makes a lot of money.
Yeah, the servicer, the entity that's actually collecting the payments, does not lose money in a foreclosure.
I can't tell you how many times I pulled into my driveway that I honestly looked at my front door to see if that sticker was on my front door, to see if my house was going to be sold in a sheriff's auction.
Belinda Brooks is the mayor of Luckey, Ohio, a small town of about 1,500 residents just outside of Toledo.
Good. Well, Oh, trouble and double trouble.
But being mayor is only a part-time job.
See ya.
She's also a small business owner who moved here 9 years ago to get away from the big city.
Did you do all these January reports yourself?
When Brooks moved to Lucky, she fell in love with the community.
Let's get all your stuff ready.
I don't want to go to school.
Oh, yes, you do. You like school?
Here, the mother of three found good schools and a low crime rate.
Oh, you're so big.
Her business is administering health plans for small companies.
Who's coming in 23 days?
Santa. Santa.
Oh, really? You think?
Yeah.
Do you?
But when the economy soured, her business started to slow.
Sammy, you want to slide through?
So Belinda Brooks did what she thought was the right thing. She began planning for the worst.
It was clear to me that the economy was taking a hit, so we were engaging and getting ready for less income. So I was just trying to make sure that I was ready for that so I wouldn't be in a bad situation down the road.
Brooks' mortgage payment was $1,500 a month. She tried to refinance, but she was underwater, meaning her home was worth less than the amount of the loan. But she heard of a new government program that promised to reduce the payments for 5 years just to keep homeowners in their homes and slow the national foreclosure bleeding. It's called the Home Affordable Modification Program, or HAMP. The government wanted banks, the same ones that had just been bailed out with taxpayer money, to return the favor and help homeowners like Belinda Brooks. But instead, many homeowners across the country say loan modifications have been a nightmare that's led them to financial ruin.
And in the end result, I might be moving out of my home, getting foreclosed on, which could damage my business, which ultimately could ruin me.
Belinda Brooks' story is similar to many we heard. But to understand what happened, you need a quick lesson in 21st century economics. Gone are the days of personal relationships between banker and borrower, as was depicted in the classic movie, It's a Wonderful Life.
Mr. and Mrs. Martini, welcome home.
Bread, that this house may never know hunger.
And wine, that joy and prosperity may reign forever. Enter the Martini Castle.
Today, there often is no relationship between the borrower and the lender. The banks that sold you the loan earned a fee for doing so, and then flipped it to Wall Street. Wall Street sliced and diced the loans and then sold them to investors around the world. Those investors own your loan, but the bank that sold you your mortgage is still in the picture, often serving as the middleman, collecting payments and deciding who and who does not get a modification.
So the bank doesn't actually hold the paper,
That's right.
but it services the loan.
It services a loan, and you don't have any control over who services your loan.
According to Diane Thompson of the National Consumer Law Center, that is a problem when it comes to modifying loans.
And so you're going to be making your payments to somebody who really doesn't have any interest in seeing you perform on that loan.
When Congress wanted to know about loan modification programs, they called Diane Thompson to testify, and she spared the servicers no mercy.
Servicers do not believe that the rules that apply to everyone else apply to them. This lawless attitude, created in part by financial incentives and too often tolerated by regulators, is the root cause of the robo-signing scandal, the failure of HAMP, and the wrongful foreclosure of countless American families.
Thompson says there are three players in this drama: the homeowners who are losing their homes, the investors who are losing money on bad loans, and the banks, or servicers, who can actually make money off of foreclosures.
These abuses occur because servicers have strong financial incentives to deny permanent modifications and in many cases to proceed with foreclosure. The illegal fees that push many homeowners into foreclosure are profit centers for servicers.
Those servicers, Thompson told us, can do quite well, even when homeowners and investors are losing their shirts.
Maybe wrong, but I think most people have the feeling, well, if a home goes into foreclosure, everybody loses. What you're telling me is the bank often makes a lot of money.
Yeah, the servicer, the entity that's actually collecting the payments, does not lose money in a foreclosure. They get all of the fees that they've charged off the top in a foreclosure before anybody else does. So
And
there are
those
lots of
fees
ways-
add up.
Those fees can add up to thousands of dollars, and they get taken off the top in a foreclosure. So the servicer gets paid first before anybody else gets paid.
Back in Ohio, Belinda Brooks was making sure her house was in order. Worried that her income would be taking a hit with the souring economy, she submitted an application for a modified loan that would lower her monthly payment. Her servicer was Aurora Loan Services in Colorado. She told us that from the start, they said they kept losing her application.
They didn't have it. They lost it. Then I have to refax it. So this process went on for 7 months, and phone calls and phone calls and phone calls, to where it was maddening, really. It was just crazy.
After months and months of sending and resending her application, the mayor from Lucky was anything but. Aurora kept her in limbo until finally, she says, the servicer suggested something surprising.
They kept telling me if I were behind on my payments, I would be placed up higher on their preference and priority on getting placed into a modification program quicker. And I kept saying, well, I don't want to be late on my payments. That's, not the purpose of what I'm trying to do. And they just kept saying, hey, you need to miss.
Brooks says she finally decided she had no other option, so she purposely missed a payment.
And so when I did pay that month late, and then all of a sudden, poof, I got my trial modification, I was very, I want to say encouraged that, oh gosh, you know what? Maybe that was it. Maybe I just needed to do that, because then I got my trial modification, and I thought maybe this will work out then.
Is the executive director of Civil Justice, a legal services firm in Maryland. His organization helps run the largest foreclosure prevention project in the country.
Well, that's on him, though, isn't it?
He says what happened to Brooks happens thousands of times across the country. Borrowers told to miss payments, paperwork lost over and over, and trial modification periods that go on and on.
You're supposed to convert at 3 months, but because they're not converting people at 3 months to permanent loans, they're stuck in limbo for extended periods of time, sometimes over a year. While they're in limbo, they're continuing to make their trial payments. The fees and interest on the loan may keep accruing, and it's another way to pad the fees for the servicers.
And attorney Diane Thompson says, borrower beware.
Yeah, so if you're told to stop making payments so that you can get a modification.
So you can qualify.
So you can qualify. You will get late fees. You will then be labeled in default, and that will show up on your credit, which will have all kinds of negative repercussions that will rattle through your life. And then also, because you're in default, you are then at risk for being foreclosed on, even if you weren't beforehand.
If your HAMP trial modification doesn't work out, you're still on the hook for your original payments, plus late fees and other charges. And that's what happened to Mayor Brooks.
I mean, they're telling me I owe, $4,000, and then $6,000, $9,000, $11,000, $12,000, $14,000. This whole time it kept going up, and none of it made sense. There's no way I could possibly owe that kind of money. That is when I got extremely nervous, and I started getting online and started doing some research about Aurora, and that's the point when my heart sank into my stomach, and I about got sick.
Brooks found chat rooms and postings about dozens of borrowers just like her who were making the lower modification payments, only to find out that the servicer, the same servicer that was supposed to be helping them, was beginning the process of foreclosure.
And that's when I panicked. I literally panicked, and that's why I said, I want out. I want out. I want to stop doing this. I'm writing a check for the full amount. I want out of this program. I will make restitution on whatever damage was done from those trial modification payments. I will pay the late fees. I have a letter saying I'll pay the late fees. I'll do what I need to do, but I just want to get this cleaned up because this has been a mess.
Brooks went back to paying her full mortgage payment, but one banker wasn't talking to another, and she was placed in default. As incomprehensible as it sounds, 2 months later, after making all her modified payments on time, the Aurora loan servicer foreclosed on Belinda Brooks' home.
Hi, I hope now you have a better understanding of what's happening to our economy and who's to blame. There are 3 things you can do. Number 1, do nothing and take what they're giving. Number 2, go below this video and click on the link to get on my newsletter, and I'll keep you informed of everything I find out. Or number 3, take action. Join me and thousands of others who are suing the banks for a free and clear title and damages. Just click on the action link below in this video. I say let's fix our economy, our country. It's up to you and me to fight for our rights.